Uncensored, the truth about money.
Oh, thank you so much. Oh man. Greetings everyone. So I forgot to record. So Thomas just reminded me to record. I think the last time we did this, we were about 10 minutes in.
10 minutes in, my man. We were done with that episode.
We're done with an episode and we had to redo it because we didn't record.
Wow. These things happen.
These things happen. Now we learn, man. We are learning.
Yeah, we learn.
So happy new month, man. Welcome to March.
Hey, the month of March.
The month
new
of
things,
March.
new beginnings, new episode.
Are you excited?
No, too much, bro. I'm always excited, bro.
Yeah.
Yeah, man. It's a new month, new goals, new episodes. Yeah. So yeah, we're on the right streak here.
How do you feel though, considering the fact that we've been moved down to level 1 in terms of the lockdown restrictions? How do you feel?
Hey man, for me it's a good thing. It just shows that we're progressing forwards. Exciting times ahead. Great things are about to happen. The economy is kicking up again. People are going to start getting their jobs back. Businesses are going to start thriving again. So yeah, I'm excited, man, about what's happening now.
Yeah. Do you think so though? Do you feel like businesses are going to thrive again, or it's time for businesses to like restructure and find new ways of surviving per se?
So you see, with everything comes change. So with that being said, people have to reorganize or re-strategize, their whole business models, their business plans. I mean, now with the pandemic, it's shifted a lot of things to become more digitized. So business will never be the same as how it was a year ago. I think the pandemic, although it was a disadvantage, but it has advantaged, the people into, opening businesses, whether it's small enterprise over, let's say, social media, or just, a side hustle where they can earn extra income. But definitely, this has definitely changed a lot of business practices, and we need to revisit the textbooks that we studied in high school and varsity about, what makes business thrive and what makes the economy thrive. Because, something like this has never happened. I think the last time a pandemic like this happened in your 1930s, if not 1920s. So, yeah, I mean, it's interesting times. Change is good, change is relevant, and we should just embrace it.
All right. So we're still on the topic of home loans. This is part 3. I think this has been like the longest topic that we had to cover. So, Prathamza, I forgot to say something. I forgot to tell you about something, right? So, so you know how we usually during the week we put out just 30-second clips of the episode, whatever that we're covering, right? So I had put that out on our social media, and then this guy on our comment section. So obviously, what we had there on that one was apparently now. So it read, apparently now is the best time to buy property, right? So this guy comes out and he puts a comment, is like, no, but how do you say that? Because a lot of people are having a difficult time. A lot of people have lost their jobs. A lot of people have basically lost their livelihood. Then how do you come out and say now is the best time to buy property? So he felt like that was being inconsiderate and that it wasn't entirely true.
Yeah, so I think, with that being said, yes, he was correct in saying that. But people need to understand that, we're covering topics and at a general level. So we're not going in depth into what's happening in the economy. We're just basically looking at the facts and how we can apply the facts to, to help people out there, to whether to purchase a car, what we covered previously, or purchasing a property. Yes, we do understand that, people are in a worse off situation than they were a year ago. But that does not mean that everyone is in that situation, and that this situation will last. Because yes, things will bounce back, people will get their jobs back, businesses will thrive, and people can still go back and revisit these podcasts to gather more information, whether it's to buying a new car or buying a new house. But yes, we still maintain, yes, now is the best time to buy a property if all situations do favor you, because there are still people out there who are purchasing properties. So we're just basically giving guidelines into that sphere.
Definitely. So let's get right into it without any further waste of time. The last question that we covered last week, right, was what is a credit score and the advantages of having a good credit score, right? And we did cover that. So if you missed, if you've missed the 2 last episodes that we've recorded on home loans, I would highly recommend that you go back, listen to those episodes, part 1, part 2, and then move on to part 3. So my question today is, what is a prime rate and how much does it affect your bond installment?
All right. So the prime rate is measured or calculated by the Reserve Bank, right?
Yes.
So the Reserve Bank puts out a prime rate, or basically borrows our commercial banks. So you get the Reserve Bank, which is like the central bank, and then you get your FNB, Standard Bank, Absa Bank, which are like your commercial banks. So the prime rate is the rate at which the Reserve Bank lends out monies to all your commercial banks. And obviously that's affected by what's happening in our economy. So the prime rate is at a quite low level. I think the last time it was this low was 1973, around about that time. Yeah. So because of this pandemic.
Yes.
But now yes, so now what's happening is that the interest rates that the banks then charge you, junior, as a buyer, or interest on your home loan, that's also low as well. So when the prime rate or the Reserve Bank decides now to increase their prime rate, that automatically affects how much junior will be paying for their home loan. So when the prime rate obviously increases, your bond installment will increase as well, and vice versa as well. If your bond installment decreases, junior will get to pay a lower amount for a bond installment.
So hence our bold statement saying now is the best time to buy property because of the prime rate being low as it is.
Yeah, man.
Yeah. So are you able to negotiate your interest rate, Bro Tamza?
Yeah, most definitely. So you are able to negotiate your interest rate depending on your credit score. So if you are in good standings, or if you are, if you have a good credit score, you are able to basically negotiate your interest rate that you're paying on your bond amount. And that could save you, thousands in the long run. So as you mentioned earlier on, that's what's important. Even these debit orders that you have, no matter how small it may be, you can have a debit order, 100 Rand or 150 Rand, and that debit order can bounce. So that can affect you buying that R1 million house, in the future. So that's why you need to basically plan your things out, pay your debts on time, make sure that you are in good financial standings. And by you having a good credit score, you are able to approach these financial institutions with the rates that they're giving you and say, listen, can I please get a reduced interest rate? And they can look into that. And if they feel that, you, junior, is in good standings in terms of his credit score, then they can, decrease your interest rates by a percentage of 2 or 3.
Sweet. Are there any type of subsidies that can help first-time buyers?
This question that you're asking right now, right? I don't think it's a lot of people actually know this.
Yeah.
And it's actually out there where, as you're saying, that people just have to go do their research. Definitely. But I also feel that it's not marketed properly as well. So yes, there are subsidies available out there, for first-time buyers. So it's called a finance-linked individual subsidiary program. So in short, it's called FLISP. So essentially what it is that the government is encouraging people with low to medium household incomes, to basically purchase their first-time properties. So basically, households that fall between 3.5 and 22,000 rand per month can qualify for a housing subsidy, with the government. But obviously, there are still stipulations that you have to that you have to meet before you can go ahead in terms of getting this.
Okay. So what sort of like stipulations are those?
All right. So first of all, right, you have to be a South African citizen, number one.
Okay.
And then you must either be married, cohabiting, so living with a life partner. You must be single with at least one dependent. So what they're saying is that, all right, you as, let's say, junior, yes, you are living with someone, or you are, single with a kid, and you earn between 3.5 and 22,000 rand. Yes, you may be able to qualify. But if you've benefited from a previous government housing program or subsidy, this basically disqualifies you from applying, for this again. And if you have already had a home loan approved by the bank, then you can go ahead in terms of applying for the subsidy.
So basically, the trick here is you need to be approved by the bank first.
100%.
So, but now, so now, if I'm earning about, let's say, about 5,000 rands a month, right? What are the chances of the bank approving me for a home loan?
So obviously, it all depends if you've got, let's say, deposit. But as we mentioned earlier on, for you to qualify for a certain house, you need to earn a certain amount. So if you, let's say, get paid 5,000 rand, you can go on the website and see how much you actually can qualify for. If you earn 5,000 rand, maybe we'll say, all right, Junior, if you can qualify for a house, let's say around 100,000 or 200,000. If you earn that 5,000 rand.
Yeah. So this is like njengoba usho ukuthi it's not really well marketed. A lot of people don't know about this. I for one did not know about this. Where can we get more information about it? And yeah.
So all the property websites that you've been visiting to view your houses, so all of them, so like your Property 24, private property, uber.co.za. So all of these, they do have information on this FLISP. And to just give you more information about it as well. So for example, there's a threshold or like a bracket in terms of how much subsidy you can qualify for. So if you earn between 3,005 and 3,007, you can qualify for 121,000 rand. If you earn between 7,000 and 7.3, you can qualify for 102,000. 21,000 to 22,000, you can qualify for 27,000. So, and the nice thing about it is that this amount here can be used as a deposit when buying a house.
Whoa. So you're saying that that amount that wait. So I'm not understanding this. So you're saying that amount, that figure you just mentioned about like 120,000 rands, right?
Yeah.
How you mentioned something about it helping you with, like, you could put it down as a deposit. Just explain what exactly do you mean by that, Pratam?
So you can indeed use the subsidy granted to pay for the deposit, right, on the home. So that will obviously earn you more favorable interest rates in the process. So remember, when you go qualify or when you go apply for that bond, you apply for the bond with all your supporting documents, that OTP, 3 months bank statement, your pay slip, or financials if you own a business.
Yes.
And then they obviously look at your credit score and your and all these documents, and then they approve you, right? So when they approve you, you then now go to the government and say, listen, I need to apply for the subsidy. They can then, all right, since the junior applied for a bond and was granted or it was approved, Junior, and let's say you basically get paid 5,000 rand. They'll say, all right, Junior, here's 120,000 rand to put towards your home loan. So
Yeah.
you can use that 120,000 as a deposit. But if, let's say, the bank gives you 100% loan where you don't need to pay for a deposit, you can pay that 120,000 into your home loan, and obviously that will help you in terms of making it more affordable to pay for your bond.
Wow. So that's money that the government literally gives you towards obviously
Yeah, man.
Wow.
Free of, free of
That's
charge. Free of charge.
that sounds too good to be true. That
Free of
does.
charge, man.
It sounds too good to be true. I don't want to lie to you. So, Manja,
Yeah, and it's free
obviously,
of charge. Mhm.
we're dealing with the government here. How long do you think that would take?
So there hasn't been any like time frames of the process of the turnaround time, but obviously looking into the whole bond application, I can say between 1 month or to 3 months. Obviously depending on your criteria and the supporting documents that they need on their side. But there's no like catch or to say that Junior, you need to pay this amount. They basically just give you that home loan so that you can own that house.
It sounds too good. So I challenge. So if there's anyone listening to this show, and you have done that, you've gotten a subsidy from the government, and they've given you the amount of money to how that amount of money or whatever amount of money, but you've actually received that subsidy. Please let us know, because for me that just, especially coming from the government, it sounds too good to be true. But Pratamza. But
Yeah, no, it's true.
if there's anyone out there, please just let us know. Send us a direct message on our Instagram. Unfortunately, that's the only platform where we can receive messages from you right now. So uncensored underscore the truth about money. That's our Instagram handle. Please send us a direct message so that we can help other people. You know what I'm saying? So if you have received that subsidy from the government, please let us know. So let's take so my next question, Pratamza, in the last episode, not the last episode. Remember when we were talking about vehicles, the truth about vehicle finance?
Yeah.
We spoke
Yeah.
about insurance, yeah.
Mhm.
Obviously, because we feel like Angiti with vehicles, what they do is basically a car cannot leave the dealership without being insured, ne?
Yeah.
So with this, what we're talking about now, with houses, right? How important is it for one to have their house insured? And is it also as much as a must as it is with vehicle insurance?
Yeah, so you need to cover all your belongings or all your valuable possessions, right? Because anything can happen. And that's why it's important, like as you mentioned earlier on, to do your research. So it's pointless. Yes, you have a house, this beautiful house with nice kitchens, bathrooms, ceramic tiles and so forth. And let's say a major storm hits or a fire breaks out because there's a leakage in the gas with the gas, and now that burns the house down. And now if you haven't covered your house, you unfortunately, you'll have to basically pay from your own pockets to fix the house. But if you've got insurance, at least you are able to put in a claim, and they'll be able to to pay out, and you'll be able to fix your house and replace your household content. Like, for example, 2 weeks back, there was a flooding in the East Rand, and a lot of our houses were flooded. And some of those floods, they damaged a lot of cupboards and tiles and so forth. So imagine if those people didn't have insurance, they wouldn't be able to replace those things that were broken. But fortunately, some of them did have, and they were able to put in claims, and their houses were fixed back to normal.
Yeah, this has been great. I've learned a lot from these past 3 episodes. I've learned a lot.
Yeah, man. Yeah, same here. Like, I think from the research that I've done on my side, and just speaking about it, obviously I own a house now, but I wish I didn't. I wish I had taken advantage of these, these subsidies and done a bit more homework. I could have been maybe in a better position than I am now. But yeah, we keep learning, my man. Every day we learn something new.
Oh, yes. Thank you so much for listening, everybody. Thank you, family. We love you so much. We love you. We love you.